right, it's time for the morning trade. Applied Materials reports earnings after the bell. For a preview, let's welcome in Schwab Network contributor JD Durkin. He joins me here at the desk. JD, good morning. Thanks for being here.
My friend, great to be with you.
All right, so you're paying attention to Applied Materials today. It looks like it's under some pressure ahead of earnings, although only off about 0.5% right now. Fill us in. What are we looking for from Applied Materials?
Yeah, that's right. It is down fractionally so far today, and I think a lot of big questions given the fact that this company does have such pretty extraordinary revenue exposure to China. Tariff pressure is going to be front and center for this company. Caroline, it's really interesting for me to go back to Q1 and see this really notable gap down in the stock and how it traded after earnings. That's despite the fact that the company did beat on bottom line earnings and was right in line for top line revenue expectations. The challenge appeared to be for Applied Materials, like so many others out there, especially in the semiconductor space, softening guidance for Q2 really seemed to be a big downward trend there. After we saw that gap down following Q1 earnings, we actually saw the stock, believe it or not, fall an additional 30% down to its April 7th lows. Since then, however, kind of commiserate with the broader market, we've seen Applied Materials bounce back almost 40%. So we'll be looking for a lot of the questions, especially considering the fact that we know Applied Materials, it's not that they make the chips, they make the machines for chip makers to make the chips. So it's a really crucial name, really important, I would argue, to the underpinnings of an Intel, a Samsung, and a Taiwan semi. A lot of information we'll be looking forward to hearing today after the bell.
Okay, so in terms of some of the estimates, I see them flashing on the screen. EPS of $2.31. Revenue, I just lost here, but you probably have the revenue estimate there. So expecting demand to remain strong if chip demand has remained strong.
Yeah, absolutely right. And that revenue expectation figure is basically in line with what it was for Q1. Expectation of about 7.13 billion or so. But again, you know, it's one thing for the company to meet or even exceed those expectations. It becomes a different challenge altogether, which has been the thing you and I have been talking about, of course, here for many weeks, about issuing that forward-looking guidance moving forward. I'm also looking to hear what the company has to say for one of its main three revenue tranches, and that's its really profitable LCD and OLED display component of its business for things like phones, tablets, and televisions. And then, of course, its core business, its chip-making machines, what it calls its silicone systems. We'll be looking for a lot of questions and answers kind of on the earnings call about how this company is uniquely positioned to battle what could be a lot of headwinds here with tariff uncertainty.
It seems like there's still quite a bit of bullishness on the street despite that exposure to China that you mentioned. I was taking a look at the breakdown. 75% of analysts rated as a buy heading into this. It's actually up about 6% year to date, although off from the 52-week high, at least by about 32%. So a ways to go to make up for some lost ground.
Its average one-year price target on the streets right now at about 201 from where the stock is trading at in real time today. That's up about 17% from the levels we see. So despite those uncertainties, to your point, still a lot of optimistic and some bullish thoughts on Applied Materials and what we could hear after the bell today.
All right. Thanks for getting us prepared for Applied Materials. That's JD Durkin. All right, let's trade it with Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Joe, thanks so much for joining us. How would you approach your example trade for Applied Materials, given, as JD just broke down, that it has exposure to China, and given that it has seen a run-up year to date, although is well off the highs?
Hi, yeah, thanks for having me. And yeah, it's a great point. We've had a huge run, and we're almost jutting up against the 200-day moving average. So it's kind of a natural spot to find some resistance. I'm kind of hopeful that this is a catalyst to break through that 200-day moving average. But obviously, I want to use options to limit my risk to do so. Just going to look out into June, about a month away. Can look at the 175, 195 call spread. Hopefully, at the expiration, that'll be over $20, but it'll cost me $6 right now to get into that trade. So that's my example trade to play to the upside, risking about 3.5% on the name to hopefully earn a lot more if we have a great earnings report.
Okay. All right, so just kind of shifting and going a little bit broader, Joe, I'm curious about your thoughts on the broader market. We are seeing some red arrows today, but still a very impressive showing for the week and for the month, especially if you take a look at the NASDAQ, up about 9% for the month right now. Are you a believer in this market, or are you a skeptic right now?
I am naturally a skeptic, an options trader. I think that just makes me a skeptic. I always want to question everything and want to see everything before, see proof in the pudding. I think that's caused me to be very skeptical when the market was selling off. We were talking about a recession that is imminent, talking about how terrible these tariffs will be. But I was saying, hey, nothing has really happened just yet. We still have good jobs growth, and we'll just wait and see on the inflation. A very great inflation data this week, by the way. It's interesting. People were getting ahead of the tariffs, maybe a lot of importing, dumping in America before the tariffs started, causing prices to go down. I think that could be really good news. And we're about to get potentially a budget. We're about to get potentially rates falling with lower inflation here. So we could have fiscal and monetary stimulus coming up. So yeah, that's a lot of reasons to be optimistic. But again, we don't have a budget yet, and we don't have rates lowered yet. So I need to see it actually happen. But the trend has been great so far recently. I think there's no reason to fade this. I love the action in the tech stocks lately. I think that's really good, really strong sign for the economy. People are putting their money where their mouth is. People are investing in the future, and these chips are the future. Back to AMAT, these chips will be bringing productivity. I think that's where America leads. Is where America will continue to lead in the software side of it, in the innovation side of it. So really excited about that potential.
Okay, all right. So as a skeptic, S&P 500 is 4% off the highs, more than 20% off the lows. Do you think it's more likely to go back and retest those lows, or maybe hit new highs?
It's a great question. I would say maybe more likely to hit those highs where we are right now. But, we're coming into the expiration here for expiration cycle for May here. A lot of times you hear the sell in May and go away. We got the VIX now under 20. I think a lot of people are just kind of saying, hey, maybe we're just going to consolidate here for a period of time. Let's figure this out. I think the market would really benefit from a period of consolidation too. So I think that sell in May, maybe sell some downside put protection instead of owning stocks. Maybe that's an interesting way to play the market right now. But the sell in May, go away. Let's wait until the summer kind of plays out, get more data. Maybe we'll start to hear more concrete action on a budget, concrete action on what the Fed's going to do, and then look for our next move, which I think more likely than not, slightly more likely, will be up than down.
Okay, it's May 15th, and I actually forgot about the sell in May old adage. I guess I haven't talked to Sam Stovall in a while, but we saw a lot of selling earlier this year, so maybe I was hoping.
It's a good thing you didn't. Yeah, good thing you hadn't thought about it until now. But now that we're at expiration, I think that's often when you see when that adage come to pass. The options expiration in May is the time for me to look at that.
All right, good point, Joe. Thanks so much. That's Joe Tigay, portfolio manager of the Rational Equity Armor Fund.